Hi, this is Randy Finney with Right Side of the Chart, and this is a late session update for Wednesday, July 20th, 2022. It is 3:32 Eastern Time. I'm starting the video, so half hour to go. Not sure if it'll get out to you by the close, but I'll do my best. Should have the bugs fixed on the website. Again, that was just a back end thing. Had some issues uploading images. But I'm going to go over all the recent trade ideas. Not all of them, but most of them. Everything not everything, but most of what I've covered in the last few weeks. So throughout trade ideas, all the time. But here's what we'll do. Just a very, very brief update on the markets because I want to get this video out, see if I can get out by the close. And I'll just say this, there's absolutely no change. How could there possibly be? We're right about where we were this morning. This is the NASDAQ 100, which again came within, mere basis points, which is a fraction of a percent. Within that 305 target there, so that's effectively hit. I always sell before an actual resistance level, and we're a little bit below there, so no change there. PPO, 60-minute PPO hasn't crossed down yet, but probably see that soon. And like I said, I'm playing with house money. It's been a good run, so I'm going to give it a little room on this short. So I think they'll probably drop the futures overnight would be my guess, because that's a significant resistance level. This is the QQQ chart, 60-minute. I cleaned it up a little, took out some of the old lines. We're well off those lows now, so you see kind of the big picture. This is, I'm going to zoom in here for you. Took away the support levels, or which were former resistance levels below, and support levels on pullbacks. But that's that same trading range right there. So that was my target since we bottomed back here, and it's been hit. And again, my initial near-term target, we can certainly go through there and keep going. I think we will go through there and keep going. It's just a matter, I think we'll pull back first. I added a little uptrend line right here. And I think I covered in the first video the pullback targets. I'm just going to drop down to a shorter term chart here for you. Or no, we can do it on this one because it's a 60-minute chart. You can see that was, we have a reaction right there. We had a line there at 12,370. That's been hit. So we got the shallowest pullback target that I could possibly add on the 60-minute chart right there. And this trend line and maybe a pullback. This would be a golden re-entry point here, that 12,180-ish level right there. And I think it's very doable. Negative divergence on the 60-minute chart. And you can read my comments to Scott. Scott's been on the site for a long time, asked the questions, kind of perplexed, and with my reasoning for closing long, or for staying long, first of all, over the last couple months. 6 weeks or whatever it was, 1 month and a week, 5 weeks, and then also for closing out those longs today. So that was answered in one of today's earlier posts, or maybe from yesterday. All right, enough on the markets. That's, again, nothing's changed. I already did coverage there. Let's talk trade ideas. On a somewhat related note, because one of the sectors I told you I liked and give you as a trade idea back here recently was the semis. SOXX doing well. But this is one that I actually told you I took some profits, mostly on the in my long-term accounts, the NQ futures and the QQQ. I had QID was what I was trading up since the lows in those accounts that I typically use ETFs instead, IRAs, college accounts, things like that. And reverse that, but left on all not all, but a lot of the individual stocks and other things that I have out there. But one of the ETFs that I had was SOXL, which is the bullish semiconductor ETF. Now, this SOXX, which it tracks the same index, it is above resistance, and I think it's going higher. I think we're going to climb all the way up to here to that 425-ish level right there. But again, pullback's probably in order before we get there, and I wanted to show you this. So if I go through the NASDAQ, well, let me just go through some of these major semis. TSM, biggest one in the sector, at resistance, good resistance. Target I had. I didn't trade this one individual. I just used that sector ETF there. NVIDIA at resistance right now. Broadcom at good, big resistance. So again, it's possible we'd blast right through these levels without a reaction. We already checked that one once from below, but this is the initial tag since we bottomed back here. And so therefore, again, I think there's we're likely to see a little profit taking here. And again, Nothing big, just active trading stuff. It either pans out or it doesn't like any other trade. So that's it for the semis. I could go down the line and show you again. I have a lot of semis. Here's the next one. I'm going just the rankings. These are ranked by market cap holdings of SOXX. And again, so many are at resistance. You look in here, you can see all that support right there. Big old gap. We back tested, failed, back tested, failed. Really, that line should be right there now because that was the most recent. You always give a higher weighting to your most recent reaction. So, all right, that's it. And, can it keep going up? Sure. I've seen the semis run. But that's a 25.5% run off the bottom in just a few weeks, a couple weeks there. And to blast on through there and keep going without even a reaction would be unusual. Let's just say that. So I like my shorts. They're going home with me tonight in the trading account, and I'll keep some hedges on. I just bought some SOX, shorted NQs, and then in some of those accounts where I had the QID, which is a 2-time long bullish QQQ version, I have SQQQ because I'm expecting a quicker pullback. When you think you might be faced with a grinding scenario, not a straight up. I like the 3 times when I'm looking for a short-term trade or what I call a unidirectional run. Unidirectional means mostly straight up. But off the lows here, I knew when pivoted here, it wasn't going to be a straight shot up to this level. There was no way it was going to be that. That's not what I thought. We're going to swing up here, and this is where the 3 times we'll start to get that price decay when you have a lot of back and forth and red candles mixed in with green candles, even if we get the move right. So in swing or trend scenarios, I'll go with an index ETF, 2-time leverage sometimes, but I'll use the 3 times for unidirectional move, like a drop like this, or if I was expecting this, right there, or just an in and out. So okay for SQQQ if we get a quick pullback one day down to about this 296-ish level, and then cover that, and we'll go from there. All right, trade ideas. I already got the semis. Let's just no particular order. I just have scratched down here. These were all over the last week or so. I believe I've shared these. I had FTFT was one shared last week. That was a long entry to be triggered on a break above this downtrend line. I told you it was very aggressive, low price, penny stock, pass if it's not your cup of tea, but it broke out today, and it's not like it gapped away. It was a breakout from the beginning, easy entry, plenty of time to get in, and it's still building on those gains. It's up 13.64%. And at the time, I only gave you this single target at 76 cents. 76 cents. And I'm going to add one right here because I see this reaction, that reaction at 58, and let's just leave it at that. Those are the, give you one more. It's a big move. You want to take quick profits. Today might be a good day because there's a gap backfill, and again, I just shared my thoughts on what I think the equity markets will do. We've returned to a risk-on environment. This is a crap stock. This is a penny stock. And in a risk-on environment, that's what's happening now. There's short covering going on. All these shorts are getting squeezed out painfully, and it's beautiful if you're a bull and you're on the right side of it and you're long. It's ugly if you're a short seller because these beat down, heavily shorted stocks are going to get squeezed here, and this may continue for a while. So like this one, for example, I would never ever short. If anything, take profits, but I think it'll go on. If this trend has more upside left in it in the stock market I'm talking about. So this guy should, has the potential, or I wouldn't have thrown it out there to hit that final target. And if so, that's good for about a 57% gain if it gets hit. SHAK. One of our members pointed out the other day that after we hit T1 here, and I highlighted that at the time. I put a post out. This was, where do we take it? Wherever in here. But what you had is somebody pointed out we had bull flag. It's more of a bullish pennant, but it's the same exact type pattern, just takes the shape of a pennant instead of a flag. The flags look like that. Pennants look like this. And there's your impulsive breakout today. Remember, this is why multiple targets are listed. We hit T1. I list multiple targets because the initial tag of each level is where I expect a reaction. You usually get it. I'd say 8, if not 9 times out of 10, you get those reactions. And an active trader can either book profits and recycle back in on the first pullback, or wait to add to the position on the breakout, or just sit tight and swing, hold out for the big payout, and that would be 58.10. Obviously just below that 58.10, that's resistance. All eyes are going to be on it, and or the downtrend line. So either way, I also want to mention Yeah, it just broke out of the flag, but if we do get a pullback in the Qs, Shake Shack could pull back as well. There's a previous reaction high right here, right about where the stock is now. Again, it's up to you. Swing, less active swing trend traders. This is a beautiful pattern. It's playing out exactly as expected. No reason to, take profits or get out of it. But an active trader could say, you know what, I'll sell here, I'll book profits. If it picks up tomorrow and takes out those recent highs, I'll jump back in. So your call. Trade it as you want. Pot stocks continue to firm up. I'm just going to go over some of the ones that I highlighted, such as OGI. I think I maybe didn't have that chart marked up. I'm just looking at another screen where I have a watch list, and I'm trying to look at the bigger names. HEXO. All of these weren't even marked up, but I mentioned, they're all going to run together. Birds of a feather, and especially in this sector. When the group runs, when you start to see them break out, they all tend to follow all the big names, and there it is. So Divergent High, it's up 21%, HEXO. The big ones were, here we go, CGC, bullish engulfing candlestick I pointed out recently. And there's a case where, look, you didn't have a green the next day, but you kept the bullish intact, and then you followed up. So far, so good. We entered the gap today. That increases the odds of a gap backfill. And I need to, turn on the levels and the targets now at this point in time. I'm just, what, we're on a risk-on environment, and just sit tight and let them run for now. Or take profits at the top of the gap. The top of the gap technically is right here. There's where you close before the gap down, but I always put, if I see a lot of resistance just below that, that's where I'm going to put. So that level really, if you want to take the quick buck, if you jumped in, started scaling in, or took hard positions in these last week, 325, that's going to be your first resistance. And look at the gap, it's around 350. That reaction high about 384. And then as of now, max target be up here. Let me turn that line back on. It used to be colored up, 478. And again, this is to just show you how the sector's moving, and just really aligning with my theory. I've had several theories lately, including that whole paradigm shift thing, but also a return to a risk-on environment from a risk-off environment, and cryptos, heavily weighted cryptos, and in pot stocks and things like that were just being sold out, sold down when we were in a risk-off environment. So there's Tilray, TLRY, and look at that. There's that level. I said need to take that out for the next buy signal. We already broke out of the downtrend line, back tested. A very impulsive rally off that back test after a couple days of back testing, and then boom, pop 375 today, and that should open the door to the next target. I can sharpen my pencil here, and I probably should, but I'd say just 483 right now if you're looking for a near-term target. And this one's up another 11% today. Chronos, CRON, there's another one, said it needed to break this trend line for the next buy signal, which it did today. Impulsive breakout, 11% gain today. ACB, Aurora Cannabis, same thing, nice basing pattern right here. Breaking out of the pattern, breaking above these recent highs, right about on them. Could do is one more day, and then boom, big old thin zone. All you have is a single candle. So you gap down from here. Really, that's the top of the gap, but there's the reaction. That's where you opened to and fell. And so if we can build in this sector and build on this stock, it should make a pretty quick run up there, and that's about 40% gain if so. And then GRWG was the first one I threw out. GRWG, Grow Generation. That's now taken out that R1 level. Remember, this one was a breakout of this bullish falling wedge pattern. Back test, started rallying since the back test, and then went on to take out, as I said, it needed to do for the next buy signal, 452, and it's up 12% today. And again, these were nice trades because it didn't gap away where you jumped up 12%. There was plenty of opportunity if you had a price alert, and if you're trading without price alerts or buy stops, you can use buy stops if you're not around. Even if you get a price alert, you have a 9 to 5 job, or that doesn't exist anymore, 8 to 5, whatever it is. You sit at a desk and a price alert goes off. If you can't trade, you can set through a broker, or most brokers, thing called a buy stop. Buy stop is if you don't own anything and you put a buy stop, let's say at 453, meaning if this stock trades through 453, it'll send it in as a market order at that point and get you into the stock. But again, if you want to make money trading, you need to be in front of the computer when these breakouts occur. Analyze them, judge them, make sure it looks good. And again, that one, plenty of opportunity to get in, and now you're up almost 12% on the day. Was up a little higher, but I think we're going to get a late day fade here in the market, and that'll probably bring other things down. Let's talk the energy sector. The CL was the most recent short trade here. And that was no change. This one was a crude oil short. You have a primary downtrend light right there. That's exactly where we shorted it the other day. It's at 101 price resistance, very good resistance level. It went down, pretty much hit that first support level there, bounced, but we're back to the trend line. So it's still offering an objective short entry for a swing down to these targets, 95.77, 92.11. And of course, you had negative divergence there. The other one thrown out recently was natural gas. In that post, and I gave you the ETN for it, is KOLD. It was a short. And on that one, I laid out 3 targets. We took it right here, and the recommendation was to use a stop of 3 to 1 or better based on your preferred price target. That means the maximum gain if hit would have been T3 at 53%. So a third of that's going to be around 18 or so percent, right? And we're well below that. This is Putin's shenanigans. They shut down the was it Nord pipeline? I forget the name of that pipeline over there in Europe. There's a great op-ed in the Wall Street Journal, and it's an opinion piece. And I agree wholeheartedly with the guy. Putin, as much as he's kind of a loose cannon, he is not going to shut down. There's all this buzz in the media right now that they may just shut down and stop the flow of oil. Russia may stop the flow of oil, and for all the reasons in that article, if I can find it, I'll post it under here. I agree with that. That's not going to happen. I think what's happening here is, there was some rhetoric from Putin today about the when the pipeline comes back online. It's probably not going to be near capacity. It's going to be well below capacity, blah, blah, blah. I think I have very little doubt Putin's probably gaming the futures market. But there's cold. So look, we're at this previous low right there. So consider that trade stopped out. I gave it some room, took some pain on it, but then after all this stuff here, we just plunged today on that news. And I have the futures anyways, but I'm back in them. I'll show you why right now. Call me a glutton for punishment. This position, this one trade, last one was certainly a failed trade. But look at this level right here. This is a 6-month chart of natural gas futures, 2-hour candlesticks. Big level right here, about just over the $8 level. We almost kissed it today, and we have some pretty steep divergences building. Right there is the RSI, there's the PPO, and again, that's big resistance. You have a price channel here, and we're working our way up this price channel. And so we'll probably come back. There could be a little more upside here, but you don't want to wait till 8.088 to short it if you're going to take a very aggressive trade with everything going on. But so I think what's going to happen, they're going to open that thing up, and they're going to be flowing the gas through there in a week or so whenever it's supposed to come online. And at that point, Putin and company, via whatever entities he uses, will most likely, even though that's going to plunge send the price of natural gas plunging, it will also send his short positions flying, because you'll see a collapse. Again, another, call it a paradigm shift if you want. I don't want to overuse that word, but when everyone thinks right now, that's the worry, that Germany and the European Union nations, they don't have enough gas for the winter. They're trying to stockpile their reserves right now. I think I read they're at like 60% capacity. They want them at least 80 something. They're going to meet in a couple days or next week to maybe it's Friday, to go over measures to see if they can agree to do a 15% curbs on usage, allocate gas usage to certain industries, and so that is scaring the market right now. And I think that's again going to be short-lived. And then when things go the other way, if that gas starts flowing, which I think it will, it is only to Putin's advantage, unless he wants to continue to get his butt kicked even worse over there in Ukraine, to not piss off Germany too much. You know what happens when Russia pisses off Germany. It's not a very good track record there. No change in the wheat trade. This is ZW wheat futures, positive divergence, little falling wedge, bullish falling wedge pattern, positive divergence, working its way up. So playing out so far, still probably going to work its way up here. One that I'm not crazy of because overall I'm looking for another leg down in commodities in general. But as of now, working and take it if you want to diversify. That's what it's all about. I try to throw out as many trade ideas as I can, and I make a big effort to make sure they're not concentrated in one sector. I'm not going to give you all pot stocks at one time, all semiconductors, all indexes, or any all bullish on the stock market or bearish on the stock market. I try to give you what I'm trading, and I try to trade diversified. But that was the case of that too. Was their primary uptrend line right there, long-term uptrend line on wheat. Hit it right there with positive, aka bullish divergence, and so far a little bounce, and there's your target. So really no change there. It's playing out as expected so far. Like anything, don't fall in love with it, just in case we continue to see commodity prices move down. And remember that I'm talking about broad-based. Certain commodities are going to do their own thing. Wheat has nothing to do with natural gas, but this is DJP, my go-to broad-based commodity index, and we broke that level, and we've been back testing, and I still favor most likely another leg down here, and that will most likely, if that happens, that's going to be that oil and nat gas reversal in the oil and natural gas trades, another leg down in those guys. And then maybe time to get back into commodities more broad-based, if you want to do a broad-based ETF. And Bitcoin, we'll start with GBTC. It has, of course, as I mentioned recently, broke out of that beautiful little basing pattern with positive divergence. But this is one I also took profits on. I plan to get back in because it's, my logic for being long this recently was that it will be a risk-on trade. It was trading almost perfectly correlated with the stock market. They both, Bitcoin and the NASDAQ, both topped back in November, and they've both been falling since, and they both bottom around the same time, and so therefore, as of now, it's a positively correlated trade. And also see on GBTC you have this previous reaction high. So again, a little pullback. I think they don't make it easy for everyone to get in. I'd love to see it come back there to 1421. I'm trading the futures, BRR. I'll get to those in a second. But if you trade this, I actually have this too, and had this. And close out today in some accounts, but plan to buy back. And then a bunch I've mentioned some of the Bitcoin proxies in some of the comment sections recently. I'll go over those real quick as well. But here's GBTC. So ultimately, I still call it up here to 18 at least, and quite possibly the primary downtrend line, which I know this chart's messy. I'll clean it up at some point. There's a lot of old trades and old lines on there. So plenty of meat left to go on the bone. Maybe it just keeps running. Who knows? But like I said, to me, it's more about just kind of locking in some profits right now and easing up, building up some cash and waiting to jump on. Ideally, if we get pullbacks, and if not, then I'll get back in at the next objective point on Bitcoin, whenever that is. BRR, the futures contracts, and let me zoom out a little bit here. Again, this chart's been covered a lot lately, but here's your primary trend line. It also shows better on a 6-month, 2-hour chart. This is just an hourly chart. This is our positive divergence right here, or divergent low. We like the market stair-stepping higher. It did take out this level here, so look. Here's what a pullback would look like. You have negative divergence right now, potential divergence. If it plays out, what it probably do is just take you back here. This is where I'd like to recycle back in, right back here, that 22,980 and uptrend line level there. And it's not much. I sold on the pop this morning with the when I started reversing into from long to short in the equity markets. That's only about a 4.5% pullback. So I'm not looking for much. The trend is strong, bullish, and everything else. But again, it's time to tighten up a little bit for me. And Ethereum, you can either trade I've been sharing with you guys the actual crypto itself, ETH. Pull it up somewhere. I have that chart here. Yeah, see, getting really close to that 1719 target. And remember, as I said, there was technically the gap is right here, and so now that gap has been backfilled. So this played in as well, and I had a ETCG and I sold that as well. I'm going to get to that. This is the actual crypto. So again, like Bitcoin, I think it'll have another leg up, but may pull back first. If it happens to pull back all the way back to 1274, that'd be a gift. I don't know if it's going to go that far, but that'd be a really nice pullback and then swing it up to the trend line. But the ETF-like instruments, remember, it's not an actual ETF. These are more like closed-end funds, similar. They'll trade at a discount or premium. These are all the targets I've had on this thing since it was down here, and it hit that 980, which rounded off is really 981. So you just have to click up whatever. When I put these levels on here, because it's a pink sheet stock, then it will go over the counter pink sheet. It'll round off to the nearest fourth digit thousands. But there it is, 981. It hit it yesterday, and then it hit it again, and that was there was a lot of reactions. There was a gap there in that, and so again, it's just a matter of kind of booking some profits in the trend and recycling in. And this is the first that was a target on the way up, 840. That rounds down to 843, and it's still support, but we could come back a little deeper. It would be nice to see, and then swing it up to that next target, 1168. That's ETCG. And then the euro US dollar, taking a little breather, but looking good. This one was also thrown out actually as a trade idea recently down here off this right here on the breakout of this bullish falling wedge divergent low, put in a ever so slight marginal new low, but extended the divergence, went on, hit our first target zone here, top of the target zone after the breakout. So this is great example of technical analysis. We had a couple things going on. I give you a resistance / target zone. We hit the bottom of that zone, and then we hit the top of the resistance zone. Got a pullback there, and that pullback took us to back test the trend line. Another thrust up, and now we're back testing that bottom of that first target zone again. And we're also PPOs now crossed above the zero line. So maybe we get that. Maybe we get a little more downside. There's a potential upturn line. There we go. That one actually got taken out. So this, remember I told you the euro and the stock market are typically correlated. So maybe a little more downside there, but as long as we stay above these recent lows, it still looks good, and I think we'll head on up there. And that's it. Yeah, closing bell just rang. Let me get the video out to you guys. Even if I had wrapped it up before then, it's YouTube. I can upload it pretty quick, but then YouTube, they got to process on their servers. So I'll get this one out to you, and it should be out to you by well before 5 p.m. This has been Randy Finney with Right Side of the Chart, and have a great day.